15 minutes opening range breakout, Guru swears by it, new traders flock to it, and yet most people lose money with it. Why? Because it's predictable. And when a strategy is that predictable, the smart money knows exactly how to use it against you. The first breakout of the day often feels like a trap, then launchpad. In this video, I'm not just going to show you why it fails, I'm going to give you the specific playbook to turn this trap into your new favorite tool. Under 15 minutes opening range breakout, or ORB, is dangerously simple. You mark the high and low of the 15 minutes candle. Price break high, you buy. Price break low, then you sell. A promise to catch the day's biggest move from the start. Full truth that simplicity is a flaw. Have you ever jumped into a breakout only to see it stall, reverse, or stop you out on a stop loss? This isn't a bad luck. It's just been designed by institutional traders. Institutional traders know a massive pool of stop losses order build up around a simple range. They can push the price just far enough to trigger all those breakouts entirely, grab the liquidity, and then move the market in the direction that they're really interested in. The breakout wasn't a signal, it was just a bait. So how do we fix it? We stop trading the breakout and we start trading the failure of the breakout. We use the trap to our advantage with 3 strict rules. Rules number 1 is context is the king. Before the market opens, look at the 1 or 4 hours chart to find the dominant trend. This is your base basically of the day. If the trend is bullish, you're only allowed to look for a long trade. If it's bearish, you only look for the short. This one filter keeps you on the right track of the market, on the right side of the market. Rule number 2 is trade re-entry, no breakout. This is a secret. Instead of buying the breakout, we wait for the fail. Let's say our base is bullish. We watch the price breaks below the range low, taking sellers into market. We do nothing. We wait for the move to run out of steam and for the price to aggressively reclaim the opening range, closing back inside. That reclaim is our entry signal. We're entering along after sellers have been trapped. Rule number 3, look for confluence. A good setup becomes a great with confirmation. Before taking the re-entry signal, ask yourself, did the fake breakouts happen at the key level, like previous day high or low? Did they reclaim open of the spike in a volume? This extra layer is basically evidence for filter out a weak signal and gives you more convention. Conclusion is the 15 minutes ORB fails because it's predictable to retail strategy. It makes you vulnerable to institutional liquidity, grabs the play on your FOMO. The solution is to flip the script. Your new playbook is simple. First, define your direction with a higher time frame base. Second, wait for the breakout against the base to fail. And the third, trade aggressive re-entry back into the range, ideally with confluence. By trading the failure instead of the breakout, you align yourself with the smart money, not against them. This gives you a light bulb moment. Hit the subscribe button and leave a comment below. Single biggest change you are going to make to your trading after watching this. Trade smart, and I'll see you on the next one.